Jerome Powell and the Fed says that Trump policies are leading to higher inflation and maybe higher unemployment. Folks, it is very clear to me after the Fed rate decision yesterday, the press conference, the Fed statement, that the Fed is going to be on hold probably for quite a while. The Fed has been remarkably clear that they see the tariffs, i.e., Trump policies, as a threat to the economy, both in higher prices and probably more significantly, lower growth and higher unemployment. To which President Trump came out this morning and called Jerome Powell a fool for not cutting rates. I will highlight to you that just this morning, the Bank of England, yes, the Bank of England cut interest rates in a surprise move, indicating that tariffs are going to endanger economic growth. So we are seeing central banks around the world get ahead of this and cut, but not the Federal Reserve. Again, the Federal Reserve, as I've said quite regularly, I believe is making a strategic error. I believe they are looking at the threat of tariffs and the one-time price increases as upside in inflation, which it certainly is, as indicated by Ken Griffin. Ken Griffin correctly says that tariffs are a painful regressive tax hitting the working class American the hardest. It is just like a sales tax. Tariffs are a regressive tax, as is inflation. We have talked about that together for 4 or 5 years, the dirty nature of inflation. However, as Ken Griffin says, it's a sales tax. And what I think the Fed is missing, and thus far, I think early data indicates we're right, is the American consumer is choosing not to participate. There was clearly some pull forward of demand, some clearly get ahead of tariffs. But as we are looking at more recent data, folks are pulling back. So again, I think the real risk of tariffs X the initial shock will be deflation. And I think the Fed is missing it. I don't think the Fed even acknowledged that deflation is a potential risk of these tariffs staying in place for long term. So it is going to be, it's going to get messy. The Fed has clearly stuck to, we're going to look at the data, look at the rear view mirror. We are not going to look out the windshield. And that means, that actually guarantees the Fed is going to be late. It guarantees that the Fed is going to be reactive. And every time in my adult life when the Fed is reactive, they have to be aggressive and cut more in response to their policy error. So again, the Fed is not in a hurry to cut. We do get 9 Fed speeches tomorrow. I think it's 9. It might be 8. It'll be interesting because, again, Powell, when he's at the press conference, is really speaking for himself. So it'll be interesting if we start to see the Fed break apart, where we see some people talk about deflation or not. This is a big deal. Again, if the Fed messes this up, it could get pretty messy. We have gotten some data that I actually expected and, again, called out on this channel. When the tariffs went into effect on new automobiles, I told you the next day, watch used cars. Used cars would go up, much like the pandemic. When we had all those supply chain shocks and new cars couldn't be produced at the same rates, used cars went up. Guess what just happened? Cox Automotive's used vehicle value index spiked 4.9% year on year and up 2.7% month on month. Again, I do not think this is going to change anytime soon. Again, you're going to see used cars catch a bid or rise in value. Don't know if you saw this or you're invested in Google, but apparently a comment from Eddie Q, who is an Apple search chief, said that AI search engines to replace standard search engines in the near term. Thought that was interesting. Jerome, a lot of quotes from Jerome Powell. We'll go through those now. Jerome Powell, there are cases in which rate cuts would not be appropriate this year. As you know, folks, I've been calling for quite a while now, no cuts in 2025. Jerome Powell is once again highlighting that is a real possibility. It is a real possibility that the Fed is on hold all year. Next, no rate cut to blunt any tariff impact. Again, the Fed is not going to cut because of Trump's tariff policy. Unlike we just heard from the Bank of England, the Bank of England did cut. They did cut this morning because of tariffs. Powell also said link between sentiment data and spending data is weak. What does that mean? This is really the understanding of soft data versus hard data. Hard data, again, in the Fed world is looking at the rearview mirror. It looks at what actually happened. Sentiment data is soft data. It is feelings. It is looking out the windshield. We have seen a deep and dark change in sentiment data. We have yet to see that roll through the hard data. I think it is absolutely coming. We just had a one-time event change/reward consumer behavior to pull forward demand, i.e. buy it now, save money. That's what consumers thought. Powell also said, my gut tells me that uncertainty is extremely high. Oh, that's cute, Jerome. That's cute. We won't make progress on our goals this year if tariffs stay where they are. Folks, that should be market moving. That's basically telling you inflation is still a problem and we're not cutting. This again is important, right? There's a lot of people. I think the market right now expects 2.5 cuts. Last week it was 4, then it was 3, now it's 2.5. Jerome Powell is telling you time and time again that 0 cuts are a real possibility in 2025. Lastly, Powell says cost of waiting is fairly low. They have no urgency. They don't see anything in the hard data that gets them nervous. They think their policy today is moderately restrictive, so they have optionality. It is very interesting to look at. We did get some more job cut announcements. CrowdStrike announced a 5% job cuts. 5% of their employees will be let go. They said in the note that AI is reshaping every industry. AI, it's going to lead to some layoffs. There is no doubt. ARM, they beat top line and bottom line, but gave weak guidance. Ford CEO said something very interesting. Ford CEO, again, automotive, obviously, expects tariffs to last the next 3 years. I did not have that on my bingo card. I think tariffs lasting 3 years is a problem. I think, frankly, 3 years of tariffs is a problem for President Trump. I think if he has tariffs where they are now in 3 years, he loses the midterms. Let's be honest for a minute. Trump needs the Republican Party to win and grow the power in the midterms. And if we're still fighting these tariff uncertainty 3 years from now, he lost the midterms, in my opinion. I think he knows that. I think his administration knows that. I think they went after the tariffs first so that they could get wins later that makes the tariffs better. But again, I would be concerned if we had tariffs. There's still a talk 3 years from now. We did get some Las Vegas updates thanks to Jody. Jody reached out to me the other day and said, Michael, I got some data for you on Las Vegas. Looks like inventory is up 78% year on year. We did have a price decline. Folks that are begging for prices to go down. Vegas saw a month-on-month drop in prices of $5,000. We went from 485 in March to 480. So yes, prices are falling. They are collapsing. They're down $5,000. About not even, I guess, 1%, down 1%. New listings are growing and pendings are falling. Folks, remember what I told you at the beginning of the year. 2025 is going to be the low of transactions. We are likely to come in nationally below 4 million, and then the world gets better. It does look like we have our first trade deal. I haven't seen an actual statement from the president yet. I think that was coming out at 7 a.m., so right when we are talking together live. It appears that the U.S. and the U.K. have announced or agreed to a comprehensive trade deal. So congratulations, folks. We have our first win, if reports are correct. This is significant. If you've ever done something like sales and pipeline and all of that, the first one is the hardest. And then typically speaking, what happens after you get the first one is you get a lot of successive wins. So I think we could all hope for, all wish for more wins to come. We did get an update from Restaurant Brands, home of Burger King, Popeyes, Tim Hortons, and the like. They too missed top line and bottom line. They too saw same-store sales fall at Burger King, Popeyes, and Tim Hortons. This is significant. Again, we had a reading from McDonald's. I think it was a week ago. It might have been 2 weeks ago. And some of you said, don't overreact to McDonald's. Their menu sucks, which I said, okay. Well, guess what? Now we've got Burger King, Popeyes, and Tim Hortons also reporting same-store sales down year on year. So again, what does that mean? If you're pulling back on buying McDonald's, Burger King, Popeyes, and Tim Hortons, you're really conserving money. You are really, really not treating yourself. You are really cutting back. So the consumers are clearly pulling back. I want to congratulate 2 people for joining school in the last 24 hours. I want to congratulate James, and I'm going to say Kanisha. I actually want to read to you something that Kanisha said in her when she introduced herself to the school community. This is exactly why you, yes, you, should join school, in my opinion. Went on to say that the beginning investor here, stepping out on faith. To be honest, I just need to be around folks that actually help others. I do not need another download, another YouTube video, or another upsell. Just some real help as I commit to adding value as well. Folks, that's what we're trying to put together inside school. It's now 360 plus folks, all going the same direction, all with the go-giver mindset. No sales in there. In fact, if you get to level 2 and level 3, you unlock thousands of dollars in education as a free bonus for being an active participant. And again, it's real easy to get to level 2 and level 3. So I would tell you, you're in the right place. You're going to be likely overwhelmed with welcomes and all of that. So if you're looking to get around a community of people looking to truly help versus another download, another video, another upsell, join school. You won't regret it. Don't know if you saw Bitcoin, if you're in the crypto world, but Bitcoin's approaching 100K again. I think it touched 99,800 earlier today, which I thought was interesting. Last thing to highlight that I saw this morning, and I hope this is false. I hope this is fake news, but my fear is it's real. It said the poorest 10% of Americans, so think about that, the poorest 10% of Americans buy 80% of lottery tickets. The poorest 10% buy 80% of the lottery tickets. That is, I don't know if that's an interesting stat, a sad stat, both, neither, but it certainly caught my attention. Folks, at the end of the day, I want to thank Steadily Landlord Insurance. Yes, Just Insurance for Landlords, for being the first and original sponsor of the Daily Financial News. There will be a link below in the description that you can click on to get a quote, see if you can get better coverage, better rates. It's also a place I would tell all new investors to go just to get a quote on properties they are looking at. One of the things you have to do as a new investor is build your buy box. You have to understand the math. And one of the key things you need is insurance. Don't guess. Put in an address, get a quote. It will help you build the spreadsheet. Again, steadily, thank you for doing that. Folks, this is our Thursday recording. We will be doing another live daily financial news Sunday morning at 7:30. I hope you have an amazing day. Take care. Later.